right, so welcome to Game Plan Sunday. Today is October 31st, 2021. It is Halloween, the Hallows Eve, as we bring in the new month coming the next day. As everybody knows, I've been out for the past 2 weeks, taking care of family business. Back in the game, love to be here with the gang. Appreciate you guys showing up here each and every week. So taking a look at the markets here this past week. Very interesting. We're coming off a pretty strong week. The indices, all the indices pretty much hit, record highs. Even taking a look here at the review that stated, we can see what the numbers are coming out to be. We came out with Bitcoin leading the way, 3.9%. And then we had the NASDAQ at 2.71%. We had the S&P 500 at 1.33%. The dollar was up 0.56%. Dow Jones up 0.4%. The Russell 2000 up 0.26%. Gold lagging, negative 0.45%. And oil, negative 0.9%. So those are the indices there. And again, you see Bitcoin had the juice. Bitcoin has been, pretty much leading the way over this, past month here. So then the NASDAQ, of course, doing what it does best. Got to pay attention to that dollar index. Of course, we definitely got to keep our eyes on that. Gold has just been kind of trippy. We'll cover some of that here. And oil is in a very interesting position as well, as we, seeing analysts calling for $100 barrels of oil. My target this year was $80, and we're already past that. So I just didn't even think we'll be, I thought that was the top we would probably see, but here we are looking like we're marching to $100 barrels of oil. So that's going to be interesting to check out. Over on the sector side, we had the consumer staples here, consumer discretionary at 4.36% that led the way last week. Technology stocks at 1.97%, healthcare at 1.63%, materials up 0.34%, and real estate 0.27%. Everything else is pretty much in the red. Consumer staples, communications, industrials, utilities, energy, and financials. All right. Good. Interesting. And Ron said, how do you think the markets will react on removing tariffs on steel and aluminum? I think they're going to respond positively. In fact, when we take a look at the charts on steel, I think they actually have a nice little setup, had a nice little pop off last week. If we just go in the drop steel here, you can see how it popped up right there, from boom, bingo, just right here at a strong level of resistance. So we want to see how it's going to play through that. But yeah, anything that's going to free up the markets is going to be a positive thing, So that's always going to be good for the markets. All right. Had a couple of headlines that I think I want to cover, coming into covering last week. A lot of key things. For one, you got to understand we're in earnings season. So as the earnings, information pops off, we're learning a whole lot more, about this market thing here. We have, Amazon and Apple, which disappointed earnings. That was pretty major. Again, especially on the retail side, seeing them, not make their targets was interesting. So, the rest of these stocks are going to have to do what they need to do, or it's going to be some real trouble because, the big boys are already falling from grace here, with all of that. So I think that's, pretty interesting here. We'll keep our eyes out on earnings, and we'll make sure to cover the earnings here going to next week because Topaz already blessed us with the chart for that. So we'll take a look at that as well. What was interesting here, we had a tweet from Jack Dorsey on hyperinflation, right? Terry dropped this in the feed for you guys. And, it was interesting. I actually saw when he posted it, actually. Like, he posted it. I was, looking at it, I think a couple of seconds or so right after he posted. I just so happened to just pull up the platform. And I'm like, oh, okay. He's calling for hyperinflation. It's interesting. I gave some commentary on it on Facebook side, because, people on Facebook, they like to debate and they have no kind of grounds to debate on. But anyway, it's just interesting to get, the algos going on some of those and people are responding. But anyway, Jack Dorsey, calling for hyperinflation. Very interesting because you got to understand Jack Dorsey, this is the guy that runs Twitter. But if you know about Jack Dorsey, he's been back and forth from here in Africa, traveling all these different countries, trying to, build this whole cryptocurrency infrastructure along with some other projects. So Jack got his hands in a whole lot of stuff. So one has to ask themselves, what in the hell does Jack see that we don't see? Forget all these economists or whoever else is talking. Jack obviously sees something, and he's telling you like, hey, hyperinflation is here. All right. Doesn't mean that he's right, but you just cannot dismiss him. You don't have to be an economist. I mean, you got to understand this guy's like, Twitter's like the highway of the world. Twitter and Facebook, him and Mark Zuckerberg, they know they got more data, live data than anybody else, probably better data sets than the government does. So it's really interesting, that he came out with that. And I guess on this post here, Cathie Wood, she's basically trying to refute his claim of hyperinflation because she's a deflationist. She's calling for deflation. I had a conversation with Mark yesterday. He was telling me about how he was listening to Cathie Wood. It's been a little while since I listened to Cathie because Cathie's a little woo-woo, right? She's a little woo-woo. She be talking about spiritual stuff and the spirits tell her this, that, and the third. She kind of out there a little bit. But she's a woman. People want to have a woman in power. You got to have some woman. Unfortunately, they got this chick. I would like to see Topaz up there. You feel me? Because then you'll get a dope woman that's up there that I can really rock with. You feel me? And she get with the stocks. She get with the technicals and all of that. And nothing with Cathie, but she's still a little woo-woo. But anyway, you still got to pay attention to her, though, because she's a big dog. And so, she's a deflationist. She's calling for, prices of things to fall. And basically her thesis is basically, everybody's piling up now because of the fear of not having for the holiday season. So she believes that this is transitory. And after the holidays, everything will start to deflate. So that's pretty much her thesis on it. It's a couple of other things around that, other premises that she's arguing on as well, which is not just the holidays, but technology. A lot of the technologists, they kind of share that whole, sentiment, because, traditionally technology brings prices down. That's what you would normally see, in competition. So you got to have competition too. And so when you have a free market, that actually takes place. You go, like I said, you got a big screen TV, 70-inch screen TV. If you bought it a couple of years ago, you spent, probably, $1,500 to $2,500 on your TV. Now you go on the floor of Walmart and pick one of those bad boys up for like $400, right? I mean, that's what technology normally does, but you got to have a free market and competition. And we don't have that. We have government intervention, lockdown economy. We have a glut of demand, not enough supply chain issues. It is just, everything is chaos right now. So even Janet Yellen was talking about, she don't even think, this whole situation is going to pan out to the end of 2022. And you got to take that, to me, with a grain of salt, because, she's with the agenda. So anyway, it's interesting to see how it all plays out. But that's Cathie and her situation here. Here's another little article that was posted in here. The 1929 stock market crash caught nearly everyone off guard. Are we headed for a similar fate? Have you guys noticed every time there's some type of financial debacle that none of the experts could call it? I mean, isn't that the case every time? If you guys study history, they always say there's nothing wrong this time. Everything is better this time. Oh, we've done it better this time. And every recession comes, it gets worse and worse and worse. I mean, this is what happens, right? They always think they got it covered, but they never have it covered. I'm talking about the smartest people on the planet can't see it coming from a mile away. And it comes. So anyway, this is a good article for you guys to check out, in here about the 1929. I covered it, years for you guys, talk about the stock market crash and the Great Depression, and how it's very similar to the economy that we're in now. Understand there's nothing new under the sun. All right. Everything that you guys see with like Joe Biden's trying to do, FDR did it under the Great Depression days, trying to get us out the Great Depression. The problem was all the interventions. It prolonged the recovery. That's what people don't understand. And that's the same thing that's happened here. Biden and them, they're trying to pass this, this stimulus package, this next package, infrastructure package he's trying to pass now. And he's getting met with a lot of resistance and things like that. They're having to cut it. But it doesn't even matter, because none of the stuff that they're going to do is going to create productivity. You got to have a productive society. You got to have production. Understand, like us as traders, what we do is speculating. It's not production. It's not. You can't have an entire society, speculating, right? Because who's going to, take out the trash? Who's going to butcher the pigs, the cows, and, who's going to grow the plants or whatever you do, that you can't neglect the real economy, the real world. And as much as I love trading, I like, teaching everybody. Listen, I wish I had, 100,000 students that I could teach. I would really enjoy that. But at the same time, everybody ain't gonna make it. You know what I'm saying? So, and so you got to try to, like 50 Cent says, get rich or die trying. It's one of those situations you try to get rich quick. Everybody's trying to get rich quick, whether it's in the crypto space, stocks, or whatever. So you got this speculative bubble, very similar to even this was happening in the Great Depression time as well, that led to the Great Depression. You had a speculative bubble, just like 2000.com. Everything was speculative. But none of the things that the government was actually doing actually helped. It actually hurt and prolonged the day of reckoning, right? So anyhow, just want you guys to be able to check that out because it's there. Let's see, ECB, don't really care too much about Christine Lagarde. She just got charged with something last week too, some old charge, but it didn't matter anyway because she's grafted in, she's protected, right? Y'all call them the elite, the Illuminati, or whoever they're supposed to be. And it's interesting is because Joe Biden, they're having the G20 meeting, and like right now, as we speak, at the G20, which is in Rome, and I just find that interesting. Anybody know your history, on Rome, if you're into the whole one world order, theory situation, what an interesting place to be in Rome, right? You guys know anything about Constantinople? How they use religion, that's what the Catholic Church is creating and stuff like that to try to bring the world into one order. Anyway, Rome is a place for that. But anyway, I just find it interesting. All these countries, they're meeting together to try to plan the world. And, they're trying to get their directives and things like that together. And I find all that very interesting. We'll see, they're trying to pass, this whole global tax on companies and stuff like that. They're moving, in an all out effort, never before type stuff. And I told you guys before, check out the movies, films, and documentaries group on the website, because it's a lot of juice in there that you need to get caught up on it. You understand? This right here, this group. But the film Atlas Shrugged, Ayn Rand, she wrote about this stuff, way back in the days, I think like 40s or 50s. But they made a modern film on it. That's a 3-part series. Check it out. But, same things that happened then. The bureaucrats was, clamping down on the entrepreneurs. Oh, man, I'm over here spilling the beans. I'm telling y'all the movie. It's a book, but, they made a movie. That's what happened. So as the central planners, the bureaucrats, come in, tax the hell out of everybody. Business owners, they try to, business entrepreneurs, they try to get away, escape, and try to create a whole nother society type situation. Anyway, very interesting, because that's what happens. It's all human action. Understand that economics itself isn't statistics. Numbers don't mean nothing. I tell you guys that every week. Numbers don't mean nothing. The basics of the economics is human action. It is a fact that humans will act. So we're just talking about human actions. Now, the thing is that sometimes humans act rationally and sometimes humans act irrationally. So that's why it's hard to predict anything. You can't really predict with numbers, We try our best to, but, you're dealing with humans, and humans can be logical or illogical. Anyway, just a little word of advice here for you guys, posted 3 days ago. As a trader, you are not in the perfection business. Understand this. Batting for averages and not home runs will keep you in the game much longer. Minimize risk and take profits often. Y'all know I got the shirts and everything. Take profits often. That's been my motto, our motto. Listen, you're not going to hit the home runs every time. Even if sometimes you're in the home run play before the home run take off, and you don't skate away with the jackpot, with the pot of gold. Take what you can. Take what you can. You understand? Like, we always talk about trading, but it's different when you talk about it in hindsight. Even myself, sometimes I beat myself up about, man, I coulda, I shoulda, woulda, but I didn't. But what did you do, right? Well, I tell you, Terry, we got to focus on what you did do. And then I congratulate you guys in the chat room. Y'all don't know. For y'all who's new watching, we got the chat room here at Washington Jackboyz. Make sure you check it out. But it's right here. Chat room is free for all our members. So just create your account and you're in there. But we're here every day. So make sure you get in here and check out your squad. It's one of the reasons that I actually created all of this, right? I mean, you think about these institutional traders, right? We're retail traders, right? All of us, right? But the big boys, you know how they actually trade? They're not like Dolo, right? They got these desks that's all together. You know, they got, you know, traders next to each other. And then you got the PMs and all that on the sides, you know, so you got your experts there, you know, keeping everything together. But they're communicating with each other with ideas and execution of orders and stuff like that, how to execute, when to execute, you know, stuff like that. So that's the way real, you know, traders are actually, you know, doing. And so they have a line of communication with other traders doing the same thing. And, you know, if you ever, you know, get a chance to simulate any of those things, which I had a chance to simulate, you know, market maker trainings and stuff like that. Very interesting stuff, you know, because you're communicating with other traders. So that's the one good reason why we had the chat room in here, so that you don't have to go at it alone, okay? It's right here on the website, so you guys definitely need to, you know, be taking advantage of it, show up. Even if I'm not there, you know, it's not for me, it's for everybody, it's for the whole community. So get in here and share your ideas, and you'd be amazed at what you can pick up from other people, you know? So definitely check that out. But anyhow, Topeezy posted, Facebook becomes Meta. All right, I thought this was interesting because you guys know I always talk about unplugging from the Matrix. And interesting, we got the new Matrix, the movie that's coming out in December. And they posted on Twitter a play on Meta, right? You know, which I thought was interesting. And I watched the first 10 minutes of Mark Zuckerberg's, you know, his presentation. It looked like it was over an hour, and there's no way I was going to sit through that for a whole hour. It was just crazy, right? But I listened to the first 10 minutes of it. I thought it was interesting because the Matrix themselves, they had a play on it, you know, Meta. And they hashtag Meta, right? They hashtag that. And the thing that I didn't know is that in the first Matrix movie, Neo, Mr. Anderson, right? The company that he worked for was called Meta Cortex, I believe. It was Meta. It's called Meta. And so anyway, I just thought that was funny because Mark Zuckerberg's whole situation would change Facebook to Meta. And that's, you know, from the movie Matrix. And, you know, if you watch the movie The Matrix, you understand that everybody's plugged in. And those people that's not plugged in, you know, they're free. OK, Morpheus, that's what he's trying to do, is free those people that want to be free. And then he's looking for the one who happens to be Neo. But the whole entirety of society is plugged into this system. And it's funny because this movie was released in 1999. But I think they started filming around 96, 97. So, you know, it's amazing that they was talking about artificial intelligence and all this stuff before we even had it in mainstream. Now, they already had this stuff in the 80s, but we didn't have smartphones. We didn't, you know, have all of that, you know, in the 90s. So the movie foreshadowed pretty much everything. You know, he talked about it in the movie The Matrix, how man with the war against artificial intelligence. Like, that's what it was all about. You remember when he told Neo, welcome to the real? He said, welcome to the real. No, he was showing that the real world is ugly, you know. The Matrix is beautiful. Everybody wants to be plugged into the Matrix, you know. And even the guy Cypher, he betrayed them because he was tired of dealing with the real world. The real world's too ugly. And he's like, you know what? He's like, I know this steak is fake, but, you know, it's going to send signals to my brain and I'm going to enjoy it. Right. But he's woke, but he's still just like, man, I'm tired of being woke. I want to go back to being a slave. That's interesting because that's what we deal with in real life today. And I don't find it surprising that Mark Zuckerberg is, you know, trying to, you know, create this metaverse. And in the presentation, that's what it is. Everybody's going to be plugged up at all times into his metaverse. And, you know, they position in a way that you can, you know, interact and be close. It was all about being close with your loved ones, being close with your coworkers and being close and blah, blah, blah. And there's been years of studies on this stuff that have been showing that Facebook specifically is responsible for, you know, like the demise of society. And it's a big issue because people are, you know, forgetting things that are required in the natural world, just like communicating with natural, you know, human beings in a real setting. And so that's why I always make it a duty myself to make sure I'm out in nature. You know, I make sure I'm plugged from my phone for certain times of the day, you know, make sure I'm not plugged into nothing. You know, you have to, because you got to understand this world was created for man, you know, and we are a part of the world. You can't neglect the real world for some artificial simulation to give you stimulants in your brain, right? This is really bad on kids to be plugged up into this stuff. All the studies that show, even like with video games, because that's basically all this is, like a video game world that you can be in at all times, you know, seeing all your peers and stuff like that. And I think it's interesting. It's a theory that I have. Maybe, you know, if we go back into another lockdown, which hopefully we don't, but maybe they say, well, we're in another lockdown. They released some new kind of virus, the Rona strand 18, can't go out, everybody dying, blah, blah, blah. But at least you can interact with your people in the metaverse. That's like some kind of creepy ass movie, right? And I think Mark, he has sent me some movie or show back in the day, a couple of years ago. I think it's called Black Mirror, and then someone called Ready Player One, some movie, I can't remember. Anyway, but all this stuff is just like, accents of all of that, right? And in the Matrix also. And yeah, so anyway, it's talking about the virtual reality headsets, the augmented reality headsets, like Microsoft has the HoloLens. They've been developing for like over 5 years now. So that's probably ready to get on the shelf sometime soon. It'd be like a requirement when you work your job, you got to have these headsets on and they analyze your entire environment and blah, blah, blah. So anyway, it'd be sold to society as a benefit. But at the end of the day, we all become less humane. We become. Have you guys seen like any documentaries or like Japan? Actually, it's interesting because my auntie, she just moved back from Japan. But I watched a couple of documentaries on Japan because, again, you guys know I got a nice little background in technology. Got a data science certification, data analyst and stuff like that. Do a little coding in Python and stuff like that. In fact, some of the indicators we use is, it's coding. So, I can do a little bit of something. You know what I'm saying? But anyway, I just watched these documentaries on them, and one of the issues that they have over there is that people are so lonely. They're so lonely. They had these robots as companions, right? And Japan is huge on robotics. I was seeing some people working in like production settings next to robots, that actually talk and have names and stuff. And, people, they're doing a production and they're talking to the robot next to them. It's just crazy. But it's kind of normal. You see people walking with, robots in the backpack, you know what I'm saying? Like they're carrying around like they're dogs and stuff, which I just find, really, really strange because people stop understanding how to communicate with other humans, living in this type of stuff. It's really dangerous, So, it's crazy when I was talking to my auntie, right? She was telling me how like they're workaholics over in Japan, right? And she has a family and stuff, right? And so she's high up in the government. She was actually with Prime Minister Abe, over their military stuff. So she's really high up. But she was telling me how sometimes they want her to work like 14-hour shifts and stuff like that. And she's like, no, I'm out of here, And because she they got her over there because of her brain. She's so, she's a freaking genius. And so when she come up with something new, they're like, oh, yes, let's go do that right now. She'd be like, nah, I've been here for like, 12 hours. I got to go to my family. I'm done. And they'd be like still trying to go. Like they're straight workaholics, bro. Like, and that's just interesting, man. It has a negative consequence on society itself. So anyway, that's my spill on Facebook, Mark Zuckerberg. Now, the interesting thing is that Facebook fell out of the whole category of the FAANG stocks. You guys remember the notorious FAANG stocks? Well, that's over. Now we got the MAGA, what do you call it? The MAGA, the MAGA T stocks. That's what we have now. The MAGA T. It ain't no more FAANG stocks, You guys know Tesla hit the 1 trillion mark, right? Let me see if I can show y'all real quick. Let's go to, give me a second. I'm gonna just pull up a scan real quick so you guys can see what I'm talking about. There ain't no more FAANG stocks. Let's just go here, pull a little scan real quick. All right, so you guys can see right here, show you those top companies right here. We're just basically taking a look at the market cap. And just take a pass here a little bit. You guys can check that out, right? And I give you all the way down here. I give you all the way right here. All right, cool. All right, so here go the market cap right here. That's the size of the company, right? Y'all see Microsoft leading the way. Okay, so we got Microsoft right there. We got Apple right here, number 2. So number 1 is Microsoft. Number 2 is Apple. Number 3 is Google, Alphabet, those two. And then you have Amazon right there. And then you have Tesla, right? And so if you see like all of these, those 1 trillion, right? So Microsoft at 2.4 trillion, Apple at 2.4 trillion, Google at 1.9 trillion, Amazon at 1.7 trillion, and Tesla just hit the 1.1 trillion mark, right? Facebook used to be in that band. Now it's not. Facebook out of order. It's at 900 billion, which is still remarkable, but it's not a part of that whole suite where we used to have the FAANG stocks. And if you take a look at the whole little acronym there, right? You know, M-A-G-A. What that spell? MAGA. So y'all thought I was over here Trump trolling. Well, the T, you can say MAGA Trump. That's a good way to think about it. Because now Tesla has joined the ranks, MAGA T. All right. So for years, we always talk about the FAANG stocks. Now we got the MAGA T stocks. That's what's leading the way. That's probably what's going to continue to lead the way. But yeah, so anyway, it was interesting is, Hertz, talking about putting in this crazy order with Tesla, and Tesla stock jumped stupid, dumb, crazy, right? And Tesla been doing numbers, right? But it's damn sure not worth these evaluations. Like it's crazy. We're in a speculative bubble, and that's what you get in speculative bubbles. You get crazy evaluations of companies that can't deliver this kind of value. And you got other companies that's going to be coming in and take Tesla's lunch. You got to understand technology stuff. Anybody with coders, hackers, they can get this stuff, man. Like, you just hire the best hackers you can, and they eventually be able to figure it out. That's why, like Warren Buffett, he never invest in like technology companies, right? Because there's no real moat. You can't really corner it off. The hackers are going to get the coding and they're going to be able to do it. You know what I'm saying? I watched this whole documentary from the kid. He's the kid who first jailbroke the iPhone, right? And then he also jailbroke the PlayStation, and Sony tried to sue him, right? And I think we're roughly around the same age. But this guy, this is years ago, mind you. This is probably 4 years ago I saw this. And so you guys can probably find it. I don't know the guy's name. If y'all know the name of the kid, drop it in the chat. But he was talking about the whole self-driving cars, and he was saying how Google was ahead of Tesla. But he's like, Tesla, they're doing pretty good too. But he actually has a company that he hires hackers across the world. This whole open source code stuff, because the world is open now. And he sets bounties, like $10,000 bounties. Any hackers that can hack the coding in the cars, these newer cars, they all computer coding. So hackers that can hack the coding on it, all he needs for them to do is to unlock the cars, and he'll pay him a $10,000 bounty. And he got this nice, he got like a regular house. It ain't really too big, but he got like a little regular house. But he got all his partners in there. They like operating out the house, doing this. And so he got this technology where all you need is a smartphone, and all you need is a smartphone. You plug this device into your car, and then you put your phone into it, and then it allows your car to be a self-driving car, right? Crazy technology. And I think to buy his device is like, I don't know, $1,500 or something. It was so cheap. He was like, it's no need to spend $100,000 on a Tesla. You just buy my software. I can turn your car into an automated driving car. But the interesting thing he was talking about is that for him to get his product out would be much easier. He was saying how it's going to take years for Tesla and Google and them to get their product out because of all the bureaucracy, the regulations. It slows things down, it takes so many years. Whereas, he's not so big, he can actually get through a little faster. But he was saying that, about like Google and stuff. So anyway, that's just one little situation where I'm just explaining to you about how somebody who can code hires all these hackers, and they create products that can actually turn your car into a self-driving car. You can save some money and have the same type of benefits as you would with, buying a $120,000 Tesla or something crazy. Or this Lucid car that just, came out. And it's interesting because we had a pretty good week in the markets. And, Lucid was one of those situations where I was trading since last week. And so you guys can see right here, it says it surged as much as 47%. And so Terry and all can tell you, like in the chat room, that's what we're talking about. We're trading in there. So you got to make sure you get in the chat right here. You feel me? So let me just take a look at this real quick with you guys. So let's take a look at Tesla. I'm going to just show you how I came up with the idea. The position started from last week. All right. So typically when Tesla's on its run up, right? The EV cars, and I got a whole list of them. So the EV stocks, they typically move up with Tesla, right? And that's what we were seeing. We were seeing, Lucid moving up. I had a lot of unusual options activity showing up, I think since last Thursday or what have you. But as you see, when that news hit Tesla, it popped up, you get this crazy pop up right here, right there. And then it starts to melt up. Slow melt up, right? Now, when I saw this, right, again, the swing from this high to this low, and I have a Fibonacci extension that it breached. I'm like, okay, this is breaching the target. Who wants to be buying at the highs, right? Obviously, if you were building your position when Tesla was squeezing down here, right? If you were in here in that squeeze, then yeah, like when you hit here, you should be, you know, taking profits, right? But then it went through that, and then it came up and hit the 1618 target here. Now, because Tesla was so over extended to me, I was looking elsewhere where I can, you know, position some capital. So then I took a look at Lucid because Lucid was beaming on my chart over here on the side. So when I took a look at Lucid, what I saw was a stock that was cheap in comparison to Tesla. You see, Tesla is already expensive, right? You know, the whole key to investing. Yeah, I remember the whole key is to buy low, sell high. Look where Tesla's at. New highs, record highs, way up here. I don't want to be a buyer up here. That maybe a few people are speculating. Big balls. See how y'all do with the extra money bags. Y'all want to buy at the highs. All right. I don't like that. But I know that when Tesla moves, this thing is moving too. But once investors catch a whiff of this, they gonna move, right? And you know, Lucid also had a little news that helped move it as well. But I mean, the setup was clear as day for me because again, I had a squeeze set up in here and the trend was moving up, right? We had a buy trigger that was in here, okay? The highs are way back up here. This is low, so look at the lows right here. This is cheap, right? So that's the way I'm looking at it. That's the way I've just analyzed it. And so for me, the technicals alone had me in this thing before there's a story about a shipment of the cars rolling out, blah, blah. I was already in here, right? So anyway, got a nice pop off in there. Now, this definitely could have been a nice jackpot play because I was already in there. But no, I didn't get the jackpot bag, but I did get my baggie, right? When it hit the, you know, from, you know, traded on the intraday charts. Because again, pay attention. This is what my thought. My thought process was that, okay, the squeeze, because I saw the squeeze in there. And typically the squeeze will take, you know, a little time to play out, right? Let me actually put you guys on another chart here. All right. Yeah. All right. So, you know, again, when you're day trading on this thing, you can see basically the spikes and the dips. And so we're taking the smaller swings. Okay. I'm just gauging smaller swings, bounce off of here, come up there. Right. And so when we bounce and hit that, I was like, okay, boom, take some profits. And it started to dip a little bit because other people were doing the same thing. But then the shorts were coming in prematurely. The shorts was coming in right up here, right? Boom. So shorts are starting to pile in right at this level, okay? And obviously that is a level. We can see it, okay? You probably can't see it from here because of, you know, we're on a bigger time frame, but on a smaller time frame, you guys can see where you would be able to see these levels just a little better. Excuse the colors here at the extended hour charts, but you'll be able to see the moves, you know, a lot better, like when you look at it on the smaller time frames. Let me just go back. Anyway, the sellers started piling up in this thing right up in here, and Chris was in the chat, and I was like, oh, the sellers are about to get ripped. The sellers are about to get their head smashed, right? The shorties. And that's exactly what happened. So when the shorties came in right here at this level, they came in prematurely. What then took place? That they got squeezed out. It's crazy. So this whole squeeze setup played out much faster than I thought it was, right? Because I've just been catching the little waves. I've been riding the waves on this thing since last week. I told you, in and out. You feel me? And so my whole idea was that, okay, I'm gonna, you know, get in and hold once the squeeze is ready to fire. I hold a little longer, but I didn't think the squeeze was ready. But they were squeezing the shorties. And once it caught that momentum, I was like, oh, that's no way you should be shorting this. Like when stocks get like that, you don't want to come in and short, right? You're too early. It was too early in the day. You know what I'm saying? So anyway, that was the talk of town. People was talking about it. We was in a trade. We had it set up right here. Now, as you can see, even after hours, it's trading above the last price, you know, by a few cents. So the momentum may continue a little more on Lucid. Let's see if we go here to the options chain. You guys can see the you got a lot of, overflow over here on the 40 strike with the options, right? So you can see the 40 strike, you got 10,000 big over there, right? So, and you got some, and 15,000 volume on here, right? You got some other big levels in here, 250, right? These out of the money joints. So, it could, take a breather, but I wouldn't want to come in here just because of the speculators, the gamblers are in here now. And so once the gamblers take hold, ain't no telling what can go through. So just take a look at this, if the momentum continues on here, I definitely believe we can get to a 40, $40 target on that. So just wanted to take a look at that with you guys. All right. Cool. All right. What else we got on the menu here? So that's Lucid. Give me 1 second. We had the GDP numbers that came out. Let me just cover this real quick. So the GDP numbers came out. Let's see what they're talking about, right? All right. So the GDP quarter over quarter annualized 2% versus 2.6% expected. So they were expecting the GDP to grow at 2.6%, but instead it yielded a measly 2%. Now, keep in mind, the second quarter was 6.7%. So that's how much fake growth we had in this economy. And again, they tell you where this growth is coming from spending, which is just crazy because you got to have a productive society, right? So all the capital they're spending, they have to find a way to get this thing to be productive for society. But anyway, you go from 6.7% all the way down to 2%. Okay, that is like a big poof. Okay, so you got to understand that the government pulled out of a lot of the spending stuff. So let me actually just read what they have in here real quick. All right, so the personal consumption 1.6 versus 0.9. So they came in, people spending more, consuming a little more. Core personal consumption expenditures, PCE quarter over quarter 4.5 versus 4.5. So that was unchanged. All right. And this is what they said. They said a slowdown in economic activity coincided with the resurgence in Delta. So they're blaming the Rona, right? So I got to watch my words on this platform because we don't want to get banned. I'm not a YouTuber. Don't plan on being a slave to those algos. We got our own website, WallstreetJackboyz.com. Make sure you register. But we do post this up after the fact on their platform. But should they ever take it down, we're good. All right. So positive impacts from stimulus checks, the stimmy checks right here, and other economic relief delivered by the government earlier this year dwindled. So all that money that was pumping is done, right? We saw that it went from 6.7 to 2%. Done. Plus, supply chain challenges have capped companies' abilities to keep up with consumer demand. They can't keep up with the demand. The demand is pumping. You feel me? The deceleration in real GDP in the third quarter was led by slowdown in consumer spending. So actually, people not spending as much. Spending has slowed down. That's problematic because, again, the GDP, most of the GDP is made up of what people are spending. The people are slowing down spending. Quite naturally, GDP is going to go down with it. They said a resurgence of the Rona resulted in new restrictions and delays in the reopening of establishments in some parts of the country. It's interesting because I don't know who actually still gives a damn about the Rona right now. I don't see it nowhere in my environment, and I'm in and out every day. I don't even wear masks, B. They be having stores, they be having masks and all this stuff. I just walk through just to see what they're going to say. Like, see if they're going to say something to me. Nobody ever say anything. Y'all be talking to the clerks and everything. I have no problem. Like, nobody's like, oh, you're going to kill me. Man, listen, I think this whole situation is played out. People had enough time to take a look at this Rona situation, and it looked just like a common cold, looked just like a regular flu or pneumonia if you get really bad. And, when people get pneumonia, they die. A lot of old people, they die every year from pneumonia, right? The flu. Growing up, my grandparents used to always talk about, boy, put some shoes on, get out there rain before you walk around with what they call it, the walking pneumonia. I don't even know. If y'all from the country, y'all know what I'm talking about. But yeah, it's like, yeah, people die every day, B. You know what I'm saying? Like, that ain't nothing new. So anyway, I think that's kind of where we headed at in society right now, unless they, release some new variant that actually starts to, kill, the younger people, what have you. But that's all around me, right? Don't nobody care anymore. It's played out. People ready to get out and live their lives. That's what people ready to do. The government and the media, they want to keep people, the scare stuff. It's just ridiculous. Anyhow, so this is very convenient for them to blame all these economic problems on this pandemic, plandemic, because again, it's just totally planned situation. Anyway, if you want to debate me on that, you can. Anyhow, in the third quarter, government assistance payments in the form of forgivable loans to businesses, grants to state and local governments, and social benefits to households all decrease. So all the government intervention is decreasing, and the GDP is falling. So guess what the government is going to have to do, gang? Guess what their answer is to the problem, right? They are going to have to continue the same crap that's got us in this situation in the first place. And the problem is that it actually doesn't fix anything. So the economy actually stagflates, okay? You have all this government intervention, all this money printing, all these programs that's supposed to help build, but yet we don't go anywhere. In fact, we're falling. And so this is what they call stagflation, right? We're stagnant. We're not moving. We're not getting any kind of growth, but all this money pumping in here. But all this money pumping, all these social programs, Biden and his Build Back Better, whatever this crap he got going on. It's socialism. That's all it is. But it's destroying the currency. It's going to destroy, the currency, which again, all fiats must die. That's what happens in every fiat situation. So we're just at that point where instead of them doing the right thing, and I say the right thing is to just allow the natural order of the economy to take place, get out of the way. The economy will cipher it all out, and it'll get it fixed much faster. But as we continue with interventionist policies, we will continue to stagflate. And guess what keeps going up higher? Assets. So asset owners become more rich. And guess who starts to complain? The people, right? The politicians will be able to use it as a voting tool and say, hey, we're going to punish the rich and blah, blah, blah. But yet you're making the rich richer. You see what I'm saying? Like, stop it, okay? Let the bad actors, the malinvestors, let them fall. If Tesla and whoever else is pumped up, Cathie Wood with all her magical woo-woo companies, those shits need to go down. You feel me? Like, that's just what needs to happen. But you never bet against the Fed. That's a common saying on Wall Street, because the Fed is pumping the money and they're going to be the recipients to get it. And so the Feds need to stop. They need to pull out. All right. But that's, and again, that's what Bill Ackman was talking about earlier. Right. And I'll show you his post where, he's calling for the same things that we're calling for. And I just thought it was interesting because even Bill Ackman is saying that the CPI numbers, remember, I told you guys, numbers don't make shit real. Numbers don't make nothing real. Understand that. Just get that through your head. We can make the numbers whatever we want to make the numbers. The CPI numbers, they don't account for it the way that they actually used to. They just kind of made it in a way that they can have the numbers to support their narrative. But even Bill Ackman says that it is understating real inflation. But that's by design, though. So they got these numbers, and what the CPI numbers, I think, is like 5.4% inflation. You remember, and the Fed's got this 2% target, right? And so they got this 2% target, and we're well above this 2% target, right? But they claiming that it's transitory or it's prolonged transitory, blah, blah, blah. They keep moving the goalposts, but they're cooking the economy, man. So anyhow, all of this, that's what's happening in here. They tell you here, consumption, the largest component of U.S. GDP, comprising about 2/3 of overall economic activity. That's 2/3, slow to a 1.6% rate. Consumption. They need you to keep spending. And so people don't have the money. Debt, personal debt is just, skyrocketed. That tell you right there that people don't have the money to spend, although you see them spending, because debt spends like cash, but it's not the same thing. They're robbing themselves from the future. They're robbing their future self from spending. And so the government's answer is to print more. All right. And you guys can see where this is going to lead to. It's going to lead to destruction. That's the only place that it can go. But yeah, you guys can see right here. This is the quarter over quarter GDP numbers. You see these wild numbers. The market it's chaos. Like I used to tell you guys about the ants. And then you see a little blip right here, and then it goes up right there, and then it goes up here. But this is where we end at right there. Don't it look like we going down? And when we go down, that's a recession. You feel me? So we're on the brink of another recession, basically. Which I find interesting because, let me pull up the yields for you guys real quick. All right, so here go the Treasury yields. And I find this interesting, right? So this is the 10-year 3 months. This is pretty much what the markets like to gauge the risk-free rate, the 10-year treasuries. And they hit these lows down here back in like July. And then you see it get up and it's trending up higher here, right? So yields are going up. Everything is going up as far as that goes. Your house rates and stuff like that. If you got any, mortgage rates and stuff like that, they're all tracked, to this. But what I want to show you is the daily yield curve. All right. So I'm going to take it back this week. Now, for you guys who took the time in the markets class on the website, you know how this works. But if you haven't taken the time in the markets class, make sure you get familiar with time in the market so you can understand these things. So when you're listening to your CNBC and your Yahoo and all of that, you know what the hell they're talking about. You don't have to be lost. Now, remember, we're traders, so you actually don't need the economics to trade. Your goal with trading is to execute those trades and manage your risk. But it's always good to understand the environment that you're in, right? But these yields, at the bottom is the time frames from 1 month, 3 months, 6 months, a year, blah, blah, blah. It goes longer and longer. So basically the whole key to this is over here on the right side, on the left side is the interest rate. So the interest rates, think of these as your rewards, okay? So if you loan the government money, right? And right here's the 1 month, for 1 month, then this is your reward, the 0.05. In fact, let me actually just switch my annotation here. I want to circle this, all right? You loan the government money for 1 month, your reward is going to be small. Quite naturally, you're not taking as much risk. You have the shortest amount of time. And then it goes to 0.6. And you see how it grows as the more time goes because you're taking out more risk. It's just like if you loan money to your homeboy. He's like, man, loan me a couple hundred, loan me 500 to the end of the week. I get paid, I'll pay you back. But you ain't taking up too much risk because you got a week to get your money back. But if he say he's going to pay you back a year from now, that's a little more risky. You don't know if he's going to get locked up. You don't know if he's going to get shot. You don't know, you don't know if you're going to have a job. You're taking on more risk. So in order for you to take on that kind of risk, you need to be incentivized to lend him that money, which that means that he's going to have to pay you more interest. The same thing works the way with the government. All right. I know y'all like the street talk. Feel me? Well, that's what that is. But as you see, the interest is supposed to be higher as time, as the maturities are longer in time because you're taking on more risk. Okay. Now, we talk a lot about the yield curve inversion. So the way that the yield curve is supposed to look, it's like this, right? Okay. But when you get the yield curve look like this is the inversion. Okay. That means that, if you loan the government money for longer terms, you're going to get paid lower interest. Okay. From here, you get, higher interest on the shorter time of the curve. And as you go longer, you're getting paid lower reward. This is not the way it's supposed to be. This is a leading indicator of recessions to come. And we talked about this. We wrote articles about it when I used to write the articles about the yield curve inversion. So the yield curve inverting is not a good thing. It is a leading indicator. It hasn't been wrong yet. But when that happens, it's a heads up that, hey, the recession is coming. So I just want to recap on that quickly because we go back to this week. We'll see. I'm going to actually fast forward here. You guys can see. And again, this is on the website. This is all over. You guys want to use this chart. There's a public version available for you or where you go through here and you could change the dates. Okay. You could change what treasuries you want to look at and all that stuff. Right. So it's an interacting chart with Tableau. All right. So I'm going to switch this chart and you'll see, look at how the yields start to change up here. Right. And in particular, what we're looking at is this 20 and this 30 year. Okay. Because the 20 year and the 30 year are going to invert. This is interesting. All right. So that's the 25th. This is the 26th. You see it's flattening. It's starting to flatten at the top. That's flattening curve. All right. The 27th, 1.93 versus 1.95. The 28, boom. Look what happened. You get the inversion. All right. So that means you get more money for lending the government your money 20 years versus 30 years. That's an inversion right there. All right. And then we go to the 29th and it inverts, even more. Right. So I think that's interesting. Definitely going to be paying attention to this development here because it doesn't look like, we're heading to the right direction. All right. So just keep that in mind with the yields here. All right. Definitely want to show you guys that. All right. Okay. Interesting news. Visa Justice Department is watching Visa financial incentives offered to Square. So yeah, this is interesting here. As Visa is trying to clamp down on competition, forcing apps to use, or these other companies to use their gateways for payments. But the stock got smacked up because, again, you see the DOJ is involved. So when the Department of Justice is also probing whether Visa unfairly limited merchants from routing debit card transactions over other rails. And take a look, Visa acquired a stake in Square when it was a small startup, okay? So that's interesting. So that's the motive right there. Square was working with networks, including Visa, okay? They got that. Visa offered lower fees for Square to send performance payments to the company, leading to Square using Visa for many of its Cash App transactions. So those people using Cash Apps. So anyway, Visa is basically trying to kill competition here, and the regulators are involved. You see, the investigators are probing if Visa deals prevented the payment firms from using other card networks or money movement technologies. So you got PayPal involved as well. They said that Visa offered incentives that convinced PayPal to encourage people to make payments via Visa branded cards. Separately, investigators are looking into a deal Visa struck related to Square's Cash App. So all of that is interesting because the bureaucrats will probably come in and, you know, slap them on the hand. They have to pay some fines or something, or it could be, you know, could be pretty bad. So you saw investors react to that in the market. Here's something that's fresh. American Airlines. All right. American Airlines said on Saturday it has canceled more than 1,400 flights over the weekend due to staff shortages and unfavorable weather. So here we go. We got more shortages. We got flights being canceled like crazy. And now they're claiming that it's part staff shortages and then part unfavorable weather. Now, I haven't taken a look at the weather forecast. I haven't noticed it. You guys noticed anything in the weather forecast? The weather's been pretty bad. I haven't seen or heard anything about weather being bad anywhere. Maybe they're telling the truth. I highly doubt it. But as far as staff shortages, that actually makes sense because of the ridiculous, you know, Rona mandates, right? And people quitting, you know, people protesting, all of the other stuff is crazy. And in fact, I saw a video earlier today, I guess it's going viral, with the pilot from Southwest over the intercom of the, you know, he's doing the introduction of the flight. And at his closing, he said, "Let's go, Brandon." And I just thought that was crazy, right? And they saying the Southwest is under fire now because, you know, Biden, he ain't feeling that. Like, you can't be having him talking about some "Let's go, Brandon." So for those that don't know what "Let's go, Brandon" stands for, it stands for F Joe Biden, the F word, you know, the middle finger, right? That's what that stands for. Anyway, you can probably YouTube the origin of that, but that's where it comes from. But anyway, he's probably, you know, standing with his, you know, colleagues who decided not to go to work, you know, because everybody's fighting these tyrannical mandates. And all of this is destroying the economy. Okay. Apple chip shortage will end, but U.S.-China supply chain train wreck is coming. So we talked about earlier, Amazon and Apple, their earnings, you know, they missed, right? I was interested. It says that Apple said that they lost $6 billion, okay, $6 billion in sales due to chip shortages. That's interesting. Okay. We've been talking about all of these, you know, supply chain, you know, shocks, you know, this entire year. This week coming up, we'll have some more data on that, which we'll cover here. Starting on Monday, we get the ISM numbers for manufacturing. We get the service numbers for ISM as well. We get a couple of different things in here in the forecast. Anyhow, talked about the housing bubble, so you guys can check that out. I do want to cover this one section here of Bill Ackman. All right, Bill Ackman. Again, this is in the Legends and Gurus group right there, so y'all can check out the Legends and Gurus. Any Legends or Gurus that you follow, you can drop their intel right here in that group. Anyhow, Ackman said that he's beginning to position his portfolio for higher rates. He's calling for higher interest rates, okay? As we have previously disclosed, let me actually just open this up a little bit because I actually watched the interview. And, you know, Bill Ackman, he's the Wall Street golden boy. You know, I call him the Wall Street golden boy. And so you guys can go back, check out the profiles, you know what I'm saying? Try to put the profiles in there and everything, couple of video feeds, check out his portfolio and stuff like that. All right, I just want to go over this. He says, as we have previously disclosed, we have put our money where our mouth is in hedging our exposure to an upward move in rates, as we believe that a rise in rates could negatively impact our long-only equity portfolio. So he's hedging already because he knows that when those rates go up, it's going to be not good for the equities markets. And he made a lot of money, you know, in equities this year with all the, you know, government intervention, right? And his portfolio is up over 15%. He made a killing. He was crying about the whole Rona, you know, situation. He had his analysts looking at numbers and blah, blah, blah. So, you know, I'll take a look at the Wall Street golden boy, as I call him. But, yeah, and the interesting thing he said in the interview that they were asking him, he said that inflation is not transitory. He said there's nothing transitory about this. And the Feds have to raise rates soon, like now. He's calling for he's actually telling them they got to do it now. Not just him, but others also, because they are going to cook this thing. All right. So this is what to expect this week, because this week we have the FOMC minutes coming up. So there's talks about tapering, okay? And Powell actually, you know, conceded about the whole transitory situation a little bit. He claiming that it's going to persist into 2022. Again, they constantly move the goalposts, right? This is what they always do, move their goalposts. All right. So, but we got the FOMC minutes meeting this Wednesday. So actually, this is what to expect from that. Investors widely expect the FOMC on Wednesday to announce that it soon will start pulling back on its monthly asset purchase program, in which the Fed is buying at least $120 billion of bonds. They're buying $120 billion of bonds a month. Markets are looking for monthly pullbacks of $10 billion in treasuries and $5 billion in mortgage-backed securities, possibly starting in November and concluding in the summer of 2022. So they're expecting to go ahead and start this whole tapering situation next month. Well, this month, that's this month starting here tomorrow, and ending it by 2022. That means that they're going to have to offload everything that fast. And so understand that it is who's looking for this? The markets are looking for monthly pullbacks. Okay, this is what the markets are expecting. Powell is going to have to deliver what the markets want, what the markets is going to puke, right? So this is another reason why we're seeing gold, you know, struggling here, because, you know, the markets is trying to get ahead. They believe that the Fed is going to do the right thing to raise these rates, or, you know, not necessarily raise rates yet, because that's a little too hard. They want to ease into this thing, so they're going to pull back their presence first. So pull back on those bond purchases. All right. So, but that's on Wednesday. But before I even get into that, let's take a look at these earnings here real quick. Because Topaz, she hooked us up with this. Thank you, Topeezy. Monday is going to be pretty light. We got a couple of like energy names, you know, Diamondback Energy, Transocean. We got Chegg in the building. We got Avis, you know, car rental place, see what they talking about. But, yeah, it's going to be pretty light. Tuesday, on the other hand, it's going to be a little more. We got Pfizer in the building. We have Activision Blizzard, definitely gonna be checking for that. BP, Under Armour. We got Zillow. You know, what's crazy, man, is that Zillow, they're wilding. They're wilding. I don't know if you guys have seen, you know, like houses in your area, wherever you live, pull up the Zillow app or the Open Door app. I mean, these guys are buying houses way over the bid, cash money, and then they're stuck. They can't even sell the houses. Zillow stopped their program and their buying program because they got all this excess inventory and they can't sell it because buyers are not biting at the prices, right? And so, dummy mistake, pricing regular people out of the market, and they're holding the bag. And so now they're forced to, to reduce the price so they can get these homes sold. And I think that's interesting because don't nobody see a bubble in the housing market, but we are definitely in some bubble-licious territory. Anyhow, T-Mobile Generac, ConocoPhillips, Marathon, Estee Lauder, XPO. Even for you Ferrari traders out there, you know, you're taking all your trading profits and buying Ferraris, but not paying your taxes. Okay, you better get it together. But anyway, Tuesday is going to be a little more lit. Wednesday, CVS, Roku, Qualcomm. Who else we got? Fastly, we got Marathon Oil, we got Etsy. And so not too big of a fuss, but we got some economic data that's also on Wednesday. So Wednesday is going to be a very busy day. All right. So Thursday, we're going to have Moderna, and it's going to be, again, action pack here. Moderna, you got Square, you got Viacom, you got Pinterest, you got Uber, you got Airbnb, Regeneron, Barrett Gold, Peloton, Cloudflare, Nikola, and Oxy. So you got like Skyworks. Yeah, Thursday is going to be action packed. So just know that Thursday is going to be action packed. We're going to get a lot of movement there. Wednesday is going to be interesting because of all the other economic data. So Wednesday and Thursday, pretty much I'm looking at getting into my trades Monday or Tuesday, in and out by, you know, Wednesday before the Feds do what they got to do. And then probably be back in to catch some waves on Thursday. If there's anything, if it gets too crazy, I have to sit it out and wait till Friday. Friday is going to be DraftKings, Coinbase. Who else we got? Dominion Energy. Pretty much DraftKings and Coinbase is going to lead the way on Friday. But yeah, so it's going to be a very action-packed week here. Looking for lots of volatility in here. And let me go up to the preview. These are some of the things that I'm looking at right here coming into this week. So we got some economic data that we'll be paying attention to. The Census Bureau reports construction spending. Take a look at the housing data. ISM numbers, which you saw on the calendar there. That's going to come out on Monday. That's tomorrow. Tuesday is the elections day. So a lot of political talk in the building. In and off year headline by gubernatorial contest in New Jersey and Virginia. So you got the politics is going to be in view. And then Wednesday, you got the Fed's meeting. Monetary policy decision meeting. You got ISM service numbers, and then you got the ADP numbers here as well. So Wednesday is going to be lots of volatility. Thursday, don't really have nothing I'm looking at on the macroeconomics or geopolitical stuff. But remember, those earnings is going to be popping. So Thursday is going to be an earnings day. Friday, we have the BLS jobs report numbers coming out there as well. So that's what we're expecting coming into this week. And with that being said, let's actually just go through these charts real quick here. Anything that you guys want to take a look at, go ahead and drop it in there now because I know we're a little over time. So we'll just go take a look at a couple of these things here. We'll start off with all right. So you can clearly see the 100 moving average was the floor here. We had an inverse head and shoulders right here. And boom, it held true. Now we're right here tagging the 127.2 extension on the Fibonacci, and this is a good profit-taking target here. Doesn't mean that we're going to get to sell that because again we can blow through and hit the 1618. So sometimes when you're in an overbought zone, like we see here, it's clearly overbought here. This overbought territory, sometimes it can linger a tad bit here. But keep in mind, we are actually last week we was record highs. This candlestick right here was record highs. Right now, at the hours, we're right here at new record highs. So, I mean, I have good reason to believe that we will be able to tag this target, if not breach through it. But do I want to be a buyer at these highs? No, I don't want to be a buying at this resistance level here, but it's going to be interesting to see that, you know, see how it's going to play out this week. All right. Yeah, Dustin, interesting. All right. So that's interesting for that. And then we take a look at the NASDAQ. Record highs, and we can see we're right here at this extension, which is a resistance zone here. And I think that because again the NASDAQ has more space than the S&P to rally up to, that we may get some good movements early in the week here in the NASDAQ space as well. As far as the Russell, all right, as far as the Russell goes, it still hasn't made that decision. I was expecting a decision to be made on the Russell 2 weeks ago. We're still chopping sideways through this thing here. And yeah, let me clear this chart up real quick. Still optimistic that a decision is going to be made here pretty soon. taking a look at the, let me actually just go to the Dow Jones, that we have a weekly squeeze on the Dow. And I think that's interesting. It's also at record highs as well. That little buy trigger right here on the Dow. We can see the squeeze is right here as well, and got a little traction that's looking upwards. And so, looking at some targets up ahead here in the Dow, where I think that the Dow may be able to move with this, you know, with the squeeze on it, we'll be able to see. Give me a second here. A couple of names that I'm probably interested in this sector. Procter and Gamble, okay, which is interesting because Procter and Gamble, we got a little squeeze on this one here. All right, we got a little squeeze that's in here. And we got a couple little buy triggers that's in here. When you take a look, it looks like a, what's this pattern look like? It looks like a double bottom, okay? Now, keep in mind, it's up against the 618 retracement right here, that resistance. But the squeeze pushes through, then yeah, you're looking at a classic double bottom, which is a bullish setup. And so I think if the Dow moves, Procter & Gamble will be one of those situations that will help it move. Interesting, because we got a lot of product that's stuck on those ships off the coast at the ports, where, you know, people got to get their good. You know, Procter & Gamble, you know, they're responsible for all your toothpaste, toothbrushes, and tissues and stuff like that, which we all know that everybody needs those things. So, you know, that's an interesting point. I think that, and again, I don't really mess with these, but you got Mark that's you know, going berserk, and it may see some more pull through on that. I think this is on news about its Rona pill, what have you. So that may be interesting, but y'all know I don't mess with the biotech, the pharmaceutical stacks. I leave that up to you gamblers. But McDonald's, I think McDonald's looks pretty interesting. You know, pretty interesting in McDonald's. I think they had a good earnings here. But yeah, they had a good earnings, and looks like they're able to pass their costs on to their customers and stuff like that. And then they're looking to, I think they're combining with IBM, or they're working with IBM, try to get some artificial intelligence to help them, you know, to help the business, not the people. It's going to be to replace the people. So again, you know, you want to make $15 an hour flipping burgers. We'll see how long that works. You know, the capitalists are going to do what they got to do, which is going to be to automate those jobs. So you'd be unemployed at $15 an hour. Okay. Let's see what you guys are looking at. Dustin is coming through with a risky one here. Playboy. All right. All right. Okay. Interesting here. Yeah. $28 on this here. What's the expected move on this one here? Let me see. You have some options on here? All right. You got about $5 movement from now until November 19th on this one. All right. In fact, let me show y'all what you see. Options time to sell. Let's see, we got some big moves on here. Nah, we got 100 on calls and 100 on puts. Nothing major there, but you got some calls in here. So the skew is more towards the call side than it is the put side. And you got to expect to move of $5 on this. So that'll put you about right here on the upside, right about here. So it's about $33 right there. So I don't really know how much you're trying to milk out of this thing. I don't see a big move on this taking place. Let me go to the intraday chart. Swing from this high to this low. We can see how it responded to the 618. That lets us know that that level is true. All right. So we came down here, boom, came back up here. That 618 was right here again, and then it hit it again. And it's testing. You got to see if it's going to clear. You do got a little buy trading in here. So the key thing is it's going to have to clear this 618 right here. And if so, then you get some upward movement. We got a target about 31.62 on that. Yeah. Okay. Yeah, no, we just looked at the options chain to take a look at the expected move. So that's what I like about the options market. We can see the expected moves. So, but yeah, that's what I got on that. The expected move for that for now. But if you're looking at it from a stock play, look at it from back here. Is that at a low? Yeah, that's good. You can swing here all the way down to this low here, which again, it might be too much, giving it too much leeway in here. But it is at the bottom here and it's trying to move up. It's trying to move up in here. Has earnings coming up November 15th. So you may get a slight drift up into earnings and we'll see how that plays out. But yeah, bullish, but I don't see too much volatility in this one where, I can really get in and do what I need to do. But overall bullish. What else? Morgan Stanley, Ron. Okay. Playing the banks. Okay. Which they're going to be sensitive about the FOMC minutes meeting this week, of course. All right. Overall, I mean, again, we can see the price is trading above all the moving averages, so chart will be bullish. Got an extended squeeze on here, and so with extended squeeze in here, if the squeeze fires off, you're looking at about $108, somewhere around $108, $110 target on this one here. Again, that's if the squeeze do what it needs to do. It is a long squeeze, so I hate long squeezes, but overall, the chart is bullish. Price is above. And so, it's only right for me to lean with a sideways to bullish, skew here. All right. Anybody else got anything else? You said Coinbase should be exciting. Yeah, it's going to be interesting. I don't know what Robinhood, we had Robinhood last week. That was they effed up. But yeah. What else do you got? Yeah, Zim. Okay. All right, Zim integrated. Yeah. Let me swing it from this high to this low right here. Because you kind of got like a little flag kind of situation that's trying to break out up here. It's up against this resistance. I don't even know when I charted this way back here, but these lines are still holding because it's responding to it. So this could break out to, I don't know, it's looking almost cup and handle-ish a little bit. But overall, it looks bullish if it can clear this resistance up here. And I think that realistically looking at the 618 as a resistance zone here. So if it does breach up, we can get right here before you get a stall out on it. Again, slow movers here, slow movers, man, slow movers. But just keep in mind, man, in the chat room, you're looking for the volatility, man. We're playing the volatility. This market is crazy. It's chaos right now on a daily basis, man. I'm getting new feeds every day. And so some things I play, some stuff I don't play. Sometimes I relax a little bit. But like I said, with Lucid, Tesla, those names have been, booming these past weeks. So it'll be interesting to see if we get some more play there. And also interesting to see how the squeeze is going to play out in the Dow. I definitely want to see how that's going to play out. As far as like oil goes, or other markets like oil and gold, I think all those oil stocks are taking a breather right now. I think that, this probably is going to continue to go even higher though. We'll see. Right now, a little sideways action for gold. For gold, again, it's still in this downtrend situation here with gold. And let's see. All right, boom. You can see my line is right here. And it has been behaving right out here to this line every time. Boom, it's getting rejected. Boom, got rejected right there. So it's interesting to see gold, if gold, is struggling here with all of this resistance. All right, struggling with, this resistance and then the moving average resistance. It is not clear in this stuff, not yet. And again, a lot of this is because of, speculation in the markets about the Feds, what they're going to do with, interest rates and stuff like that. So, gold is not doing too well. It is traded under the moving averages again. So I think it's going to probably continue to chop around a little bit right there. So But anyhow, I appreciate you guys letting me talk your head off again today. Glad to be back in your presence. Make sure y'all check us out at wallstreetjackboyz.com. And if you watch the YouTube replay, make sure you subscribe to the channel. So just in case you missed the live sessions, that you actually, get this one here as soon as we release it after the fact. But definitely appreciate you guys here. And we'll see you on the website, Wall Street Jackboyz. Okay, don't forget that. Wall Street Jackboyz. I see you right here in the chat room, right? You know the chat room. Boom. Right in the bubble right here at the bottom. Chat room. In there. Holler at your peoples. Y'all have a good night. Peace.